estate is a supply and demand driven market that is tempered by interest rates and the stock market. Now, the last several weeks here, we have seen a lot more market activity. More buyers are looking at properties, more showings, and that tends to translate into a little bit more number of offers per listing, essentially. Not seeing anything crazy or expecting anything crazy on the pricing perspective, yet some of the forecasts from different data sources have become more optimistic over the last month here. In some of the conversations I've been having, people have expressed concern about an economic slowdown or a recession. We all read the same news, I understand that. In reality, let's take a look at what it would take to have a slowdown on the real estate front in the area. And the answer is it would take a ton, and I mean a ton, of homes. We have been operating and continue to operate in an environment of inventory shortage. Looking at inventory, we have less than 2 months of supply. What that means is if no new homes went on the market as of today, it would take less than 2 months to sell everything that is currently for sale. Now, back in 2008, we had 14 months of inventory. It would take over a year to sell everything off. We're nowhere close to that, of course. Inventory is up a little bit, but we're in that period during the year, natural seasonality, number of homes goes up a little bit, but so does the buyer demand. Another metric I've been watching very closely when the market does change is the absorption rate. What that looks at is, in a particular neighborhood or different price point, how many homes have went on the market that are new, and how many were absorbed, aka sold. Regardless of how I look at the data from different price points across different property types, the number of homes absorbed by buyers, aka the demand for housing, is much higher than the number of properties that go on the market. Net, the sky's not falling. I've been saying it for months because at a fundamental level, our local market is very healthy. Now, of course, real estate is a lagging indicator, but looking at the fundamentals, we have been and continue to operate in an environment of inventory shortage. We all read the same news. Of course, the higher interest rates, which are double where they were a year ago, by the way. Of course, some buyers are not going to be able to afford what they wanted to. And of course, not every seller is going to want to take out a home loan for their move-up house and pay double what they would have paid last year. That said, we are down 10.7% on average across Bay Area's median prices from where we were when we peaked in spring of 2022. Bay Area's median home prices have come down 10.7% from the peak at the end of last spring. Now, buyers who bought back then still had a very good deal because from a cash perspective, it was less than they'd pay today because interest rates were much lower. And then the borrowers of today, be it a first-time buyer or a seller that's buying their next move-up house, they're saving 10.7% from last year's median prices. Interest rates are higher, yes, they're still expected to go up here, overall looking at the Fed's guidance. And mortgage rates can be refinanced down the road. So trying to take advantage of the slight dip in pricing is a good deal. And on top of that, you're saving 10% plus on property taxes forever for the duration of your home ownership. Think about that. At a fundamental level, the market continues to be strong. I'll keep you informed as always, and thank you so much for watching. See you next time.